the Essays of Warren Buffett Lessons for Corporate America. Welcome. In this video, we'll explore the most valuable lessons from the Essays of Warren Buffett, a book that compiles decades of experience from one of the most successful investors of all time. This collection offers a deep dive into investment philosophy, business management, and ethical principles that can change the way you view the financial world. Before we begin, make sure to subscribe to our channel for exclusive content on investments, markets, and financial strategies. Let's dive in. What makes this book special? Content accessibility. The topics discussed are often complex and challenging for many to grasp, but the author's writing style is clear and approachable. Through analogies, stories, and simple explanations, even the most technical concepts are made easy to understand. Practical approach. The author goes beyond just investment strategies. They tackle key themes such as corporate governance principles, business philosophies, ethics in business, risk management practices, long-term lessons. One of the central messages of the book is the importance of adopting a long-term perspective in investment. Patience, a focus on solid businesses, and a rejection of market fads and trends are all emphasized. These principles help investors navigate volatile market conditions with confidence. Main topics covered: the value of investing. The author elaborates on their philosophy of value investing, which was popularized by their mentor. The focus is on purchasing stocks of companies whose intrinsic value exceeds their market price, allowing investors to acquire shares at a discount to their true worth. The importance of the management team. For the author, a company's leadership is one of the most crucial factors in its long-term success. They emphasize that ethical, competent, and motivated managers who focus on creating long-term value are the key to sustained growth. The power of compound interest. One of the essential teachings is the power of reinvesting profits. This allows for exponential growth over time, demonstrating the importance of patience and strategic decision-making in building wealth. Long-term vision. The author is critical of short-term thinking and speculative behavior in investing. Instead, they stress the importance of focusing on the fundamentals of the companies in which you invest, emphasizing the long-term potential over short-term fluctuations in stock prices. The role of the shareholder. The author stresses the importance of shareholder responsibility. Shareholders, as partial owners of a company, have a significant role to play in ensuring that management acts in their best interests and prioritizes long-term value creation. Who is this book for? Beginner investors looking to learn the basics of investing and financial strategies. Entrepreneurs wanting to improve their business management skills and leadership strategies. Finance professionals interested in gaining insight into the author's investment philosophy and approach to managing wealth. Anyone who wants to understand the deeper workings of the corporate world, financial markets, and the ethical principles that should guide decision-making. Chapter 1. Corporate Governance. In this chapter, the author discusses the importance of strong corporate governance. The author believes that shareholders are the rightful owners of a company and that directors should act as their representatives. They criticize practices such as excessive executive compensation and lack of transparency in financial reporting. Effective governance aligns the interests of management and shareholders, helping to ensure long-term success. A company thrives when there is alignment between management and shareholders, prioritizing the creation of long-term value over the pursuit of quick profits. Chapter 2. Investment Philosophy. The author's investment philosophy revolves around the concept of value investing, which focuses on purchasing stocks of companies that are undervalued compared to their intrinsic worth. They stress the importance of patience and a long-term outlook, advising investors to be cautious of market trends and speculative behavior. Buying shares in a company is akin to buying a part of that business. If you wouldn't want to buy the entire company, then you shouldn't invest in its stock. Chapter 3. Long-term investing. This chapter emphasizes the importance of thinking long-term, ignoring short-term market fluctuations. The author advises that companies should be judged based on their ability to create sustained value rather than being influenced by temporary market sentiment. A long-term focus enables investors to capitalize on opportunities and avoid emotional reactions to market volatility. Stay calm during market downturns. Use these times as opportunities to buy great companies at discounted prices. Chapter 4. Business Management. The author shares insights into how they select managers for the companies in which they invest. They seek leaders who are not only competent and passionate but also ethical and focused on long-term value creation. Additionally, they believe in decentralizing decision-making and empowering employees to make informed decisions without excessive oversight. Great companies are managed by people who trust their employees and allow them to make decisions that align with the company's long-term goals. Chapter 5. Dividend Policies. In this chapter, the author addresses how companies should manage retained earnings. Instead of paying excessive dividends, they recommend reinvesting these earnings into projects and opportunities that can provide higher returns for shareholders. However, if the company cannot identify valuable reinvestment opportunities, returning the funds to shareholders in the form of dividends is a viable option. Companies should only pay dividends when there are no better opportunities to reinvest those funds back into the business. Chapter 6. Mergers and Acquisitions. The author criticizes mergers and acquisitions that are driven by the egos of executives or by fleeting market trends. They argue that acquisitions should only be pursued if they significantly enhance the company's intrinsic value and benefit the shareholders. Mergers and acquisitions should be based on sound financial logic, not on the personal ambitions of management or external market pressures. Chapter 7. Accounting and Financial Reporting. The author stresses the importance of honesty and transparency in financial reporting. They criticize companies that use accounting tricks to make their financial performance look better than it actually is, warning that these practices can erode investor trust. Clear, honest, and transparent financial reporting builds trust with shareholders and strengthens the company's long-term reputation. Chapter 8. Debt and Leverage. The author is a strong advocate for cautious use of debt. While leverage can be useful in certain situations, excessive borrowing can place a company in a vulnerable position, particularly during periods of economic stress. The author advises maintaining a conservative financial position and only using debt when it's absolutely necessary. Debt is a dangerous tool that should be used sparingly and with great caution. Chapter 9. The Role of the Shareholder. In this chapter, the author discusses the active role shareholders must play in ensuring the success of the companies they invest in. This includes selecting competent directors, monitoring management, and holding companies accountable for creating long-term value rather than focusing on short-term stock price movements. Shareholders should take an active, responsible role in the companies they own, ensuring that management is aligned with their long-term interests. Chapter 10. Ethics in Business. The author devotes an entire chapter to discussing business ethics. They argue that integrity is the foundation of long-term business success. Without ethical behavior and trustworthiness, business relationships collapse, negatively impacting financial performance in the long run. Lasting success in business is built on a foundation of strong ethical principles and acting with integrity in all business dealings. Chapter 11. Life Lessons. In the final chapter, the author reflects on the lessons learned throughout their life, both personally and professionally. They emphasize the importance of surrounding oneself with honest, trustworthy people, learning from past mistakes, and staying humble, even at the peak of success. True success is not measured by wealth alone, but by the quality of relationships, integrity, and personal fulfillment. What makes the author unique? What distinguishes the author is not just their incredible investment acumen, but their ability to simplify complex ideas and convey ethical values. This book is not merely an investment manual. It is a guide to living a principled life, both in business and beyond. Thank you for joining us on this journey through the valuable lessons of the Essays of Warren Buffett. If you found this content helpful, don't forget to subscribe to our channel and click the bell icon to receive more videos like this. Here, we offer strategies for financial success, book reviews, and practical tips to guide your investment decisions. Join our community and let's work together to build a stronger financial future.